let's say I was looking to launch a fund today. Distribution. So what are the pitfalls of trying to convince the market that I have an alpha generating proposition is something that people will want to look at?
Yeah, look, starting a business in the absolute return space in Australia now is very difficult, is what I'd say. And it's certainly much easier offshore, where you've got a lot greater acceptance of where those alternatives fit into a portfolio and where investors are willing to take risk in terms of seeding new managers or allocating to early stage managers.
Okay, so let's dig into that a little bit then. So what are the specific blockers in terms of why that can't get up? Is it the research houses don't take a look at you? Is it the super funds are too big to even consider, or that they have different risk profiles? Is there anything you can draw on?
Look, they're both really key reasons in terms of why there is that differentiator, because the Australian landscape has changed dramatically, and we are highly regulated as a financial services industry. There's certainly some value in that, and the regulators do a great job of protecting investors, but they also make it really hard to get things off the ground and for the end investor to take risk. Okay. So, if you go back 20 years ago, there was, close to 200 super funds, and a lot of them very much on the smaller end, who were willing to take risk and seed managers and allocate to early stage managers.
Yeah.
They've now gone away.
But that's a critical function of innovation, though.
Yeah, that's sort of if you look at sort of the life cycle of financial services and the asset management industry in Australia, that's where you got a lot of that seed capital and a lot of that innovation, a lot of that growth. That's now gone away. Right. So the fact that we're going to probably end up with 5 to 10 big super funds means that they're all going to be too big to seed young managers.
Do you think it's then a case of you don't know what you don't know? So the super funds will continue doing what they do, offer their mix of investments, have their performance, but essentially they're missing out on a broader potential better performance by not having some of these innovative areas included.
Absolutely. Like if you look at what a successful asset management business should deliver in terms of IRRs and yield to the end investor as a shareholder, you should be building a business which is probably 30, an IRR of 30 and a yield back to investors of 40% plus over the medium to longer term. That's a return that's very hard to get in any other sector anywhere. Yeah. So the asset management business for a potential investor at the shareholder level should be very attractive. Okay. But it's not in Super's best interest to do that because they're very much benchmarked. So their idea is not to take risk to outperform, it's very much not to underperform. So there's very little incentive for them to take that risk, whereas, they used to do that.